Hey, everybody. Thanks for joining us today. Today, we're going to talk about mortgages. I have a friend, colleague, a mortgage specialist from the M2 mortgage team of Capital Lending, Melissa Pereira. I'm going to get her to tell you a little bit more about herself, but this video is going to talk about basically when you're buying and selling and the mortgage options that you have. There's three main ones that we're going to discuss. Uh, the porting of mortgages, a sideways lateral move, the upsizing, and the downsizing. And as we know, we just recently had a rate cut, but I'll let Melissa tell you about that as well with what's going on. So, Melissa Pereira, welcome. Say hi and tell us a little bit about yourself.
Hey, Kev. Thank you so much for having me today. Super excited to be here and dive into all the things. So, I am Melissa. I am a level two mortgage agent and partner of the M2 mortgage team with Capital Home Lending. And my team and I believe in making the mortgage process as simple and easy as possible for our clients. We understand that mortgages can be very daunting and confusing and scary to many. And so, we're here to say it doesn't have to be. We believe in meeting our clients where they're at, whether they're first time home buyers or experienced investors. We're really here to hold their hand and walk them through the entire process from start to finish. And I will say, with buying your first home, as exciting and big as that might seem, the reality is you're just focusing on that one goal, which is buying your first home. So when it comes to buying your next home and selling and buying, there's a lot more moving pieces to consider. As you already mentioned, there's different scenarios that you might run into. So, really excited to get into it.
Yeah, let's talk about the one I think that happens the least, or at least that I see the least, and that's your lateral movement, right? I guess the only thing that I think when that might happen is when someone's relocating cities and they're not looking for anything bigger or smaller, and they just need to get something that is very similar. Um, why don't you break down the whole lateral move for us, Melissa?
All right, great place to start. So, in the mortgage world, this is called a port. And you're absolutely right. It's definitely the least common of the scenarios. And, like you mentioned, somebody might be moving cities, or for whatever reason, they just want to do a move. They don't need any more mortgage money or any less mortgage money. So, they're literally just taking their mortgage loan dollar for dollar and porting it onto the new property. So, a couple things to keep in mind that a lot of people don't consider because they think, well, I'm just taking my mortgage with me and it's no big deal. We're good. And it's not necessarily the case, right? So, number one, the buyer or the client, whoever's on the mortgage, does have to requalify again. So, that means, they'll have to go through the whole verification process, income process, and as well, they have to take into account the new property that they are looking to purchase. And technically, the lender does need to revisit the property itself. And the reason for this is marketability, right? So when you are qualifying for a mortgage, not only is the buyer qualifying for the mortgage, but it's also property specific. So just because the lender approved you on one property doesn't necessarily mean that you can take the same mortgage to another one.
I think one thing a lot of people don't think about when they think about mortgages is that it matters that they're getting not the bank's money. The bank is giving them our money, right? Other people's money. So all lenders, bank, private, B lender, whatever, they are giving you somebody else's money. So they need to make sure that they are risking the least amount, like they're not at in any risk or the least possible risk they can be in, or however I want to say that. I don't know. But yeah, they all want to minimize their risk and make sure that one, you can qualify, the property is resaleable, as you're saying, right? To make sure that you're not just buying something way out in Timbuktu for the same amount of money that they don't think is going to cover their butt if anything ever goes sideways.
You nailed it. Exactly.
So the one that I'm excited about right now, and I think a lot of people hopefully listening to this will be thinking about it right now because there's a big opportunity for those upsizers in the market right now. I've been talking to people recently about being able to afford that house that they couldn't afford a few
Yeah.
years ago, right? Everybody thinks about how the market is down and how if I sell my property, I'm not going to make as much. But the one thing I say to everybody about almost every topic is it doesn't matter what you spend or what you save. The number to be concerned about is what you're going to net at the end of everything.
Mhm.
So for right now in our world, and I'll let you get into this more about the mortgage side of it and why upsizing and the advantages that they have with this, the way that the market is, if you're having a 20 or 15% drop in price point to what it was, yes, your house will sell for less. So let's do this with easy math. Let's say you had $1 million home. Now it's only going to sell for 800, but now you can, the $1.8 million home, is now going to sell for somewhere around 1.5, and you were able to qualify for 1.5 million, but you couldn't qualify for that 1.8. So there's opportunities for buyers right now, buyers and sellers to move up, right? Homeowners to move up in this situation where they're going to be able to afford something they couldn't afford when that price was higher, and all concerned about not being able to sell their property for the most. Anyways, that's the real estate side of upsizing. Melissa, why don't you talk to us from the mortgage point of view about what a seller or buyer, as they're doing both, needs
Mhm.
to understand with their mortgage situation?
Of course, very well said, and you nailed it now. Like we're finding that clients are able to and are qualifying for more with the rates, having come down this year. So affordability is easier for our clients now, right? Even in those selling and buying situations. So for the scenario where a client is upsizing, so most cases, what's happening is they are relying on the proceeds of their sale for the down payment on the new property. So, a huge part of the equation here is that we have to do a very deep dive into what we call a down payment calculation. So we figure out, how much are they anticipating to sell the property for, then we deduct, their current mortgage, legal fees, realtor fees, et cetera, et cetera. We land at a number, and that's going to determine what their down payment is for the new property, and that's ultimately how we qualify them for their new purchase.
What about somebody that's looking to buy something before they sell? Do we just use rough numbers, or how would you advise those clients?
I'm glad that you asked. So, what you're hinting towards is bridge financing. So, in this scenario, you are trying to close on your purchase before you close on your sale. But as we mentioned, you need the proceeds from your sales, the down payment, but you don't have that yet, right? So, this is what we call bridge financing. A few things to keep in mind. So, most lenders will offer you bridge financing options, but it's very important that you have that conversation with your mortgage professional. Um, so the caveat is, or the requirements are that you'll need a firm sale and a firm purchase. Okay, that's number one. Also, be mindful if you're changing ownership from one property to the other. So we can dive into that a little bit more if you'd like. But yeah, the long and the short is, or the short and the long is that there are bridge financing options to available. Just you have to have the conversation in advance.
And let's talk about what you're talking about removing people off title, because we were talking about this a little bit earlier, not on camera. But I think it's a great example and something that does happen and is going to happen more and more. So that people need to be aware about how this all goes.
Yeah, so scenario that will likely resonate with a lot of viewers is, let's say a parent helps their child, they co-sign, they act as a co-signer, and they help their child buy their first home. Now, they're earning a little bit more money, their property's accumulated in value. Maybe now they're looking to buy with a partner. So now when they're buying their next home, the parent's intention is to be removed from title, right? And all that's fine. But again, it's important to have these in-depth and thorough conversations because there's going to be extra due diligence and other things that the lenders need to factor in and take into consideration. So, for example, let's say you need bridge financing, and so that down payment money is being used for your purchase, but technically part of the proceeds of that sale belong to the parent, technically legally. Um, and so they need to make sure and take extra steps, have the parents also sign for the bridge financing, even if they're not going to be on the purchase, because they have to authorize all of it. And, all that due diligence has to take place as well.
I say this with a lot of things. People think they know something that they maybe know a bit about, but they don't know everything about, and then they fill in the rest of what their brain kind of tells them.
Yeah.
Um, Please talk to an advisor, talk to a specialist when you're thinking about doing something, and give yourself that runway. Like I'm very sure, Melissa, you talk to clients months before they actually are getting into the situation to make sure that they know how to best proceed with something like that, right? Um,
Yeah. And what I will say, what I'll add to that is we're in your corner. So, one of the great things about working with like a mortgage agent through the broker channel is that, we're here helping you navigate the lenders, right? So if you go directly to your bank and if you say too much or show too much sometimes, they can't unsee it. And I'm not saying we don't do anything that's not kosher, but we help you navigate that and have the right conversations with the lenders.
Having multiple lenders too, right? Your bank
Yeah.
is only one lender. You have access to multiple lenders, banks, and other sources as well, which is a great thing about having a mortgage broker that is available to all these channels as well.
Yeah.
The last one that we're going to dive into here was the downsizing. And again, just
Hmm.
to go a little bit with the market and what's happening right now is people are scared to downsize because, again, they're selling at a loss and then they're buying at a loss. But the math that we did earlier, that would show you that they're not winning here. But there are still ways for sellers that are downsizing to be creative, right? Most that are downsizing get into a condo. Right now, the condo market is not doing well at all. So there are a lot of opportunities there that you can take advantage of. There's builder sales right now currently. There's assignment sales where, again, there are deals to be had for those downsizers. So even though, yes, you're not selling at the most opportune time or what the market was 3 years ago, which is not coming back anytime soon, but people seem to think it might. We have to move. We have to get into something. So be creative about where you're going. Again, buying something that you can then renovate yourself instead of buying something that's already done. One, you get to choose how your place is going to look instead of buying something that somebody else did. But there's always a profit in there. That's why they do these things, flippers and stuff like that. So you can make that profit part of your equity when you're downsizing. So again, trying to minimize that number of what you net. So again, downsizing right now, if something you need to do, don't delay it because you're scared of what's going on. There are opportunities right now. You just have to think outside the box. So, Melissa, from the mortgage side of things, when we're looking at downsizing, how does it work for the seller?
Absolutely. So with downsizing itself, I do feel like there's several different scenarios, but we'll kind of hone in a little bit here. And with any of the scenarios, what I will emphasize, it's very much case by case. So definitely, very important to keep that in mind. So with downsizing, very common with our retirees, our senior clients, and ultimately, usually with downsizing, the client's ultimate goal is to wind up mortgage free. So, that let's say they're selling their property that probably has little or no mortgage, and then they want to use those proceeds to purchase their new property outright. So, let's say they close on the sale first, and then they close on the purchase next. There's really no financing that needs to be factored in or worried about. But more often than not, interestingly, with downsizing scenarios, clients usually like to close on the purchase first and then sell. And what this means is that they technically have to qualify for two properties at the same time. So, a lot more moving pieces in this type of a scenario. And again, different options we can offer our clients. So, it might look like a home equity line of credit that they're taking out, which is, fully open and then gets paid off with the sale. In some scenarios, we're able to offer reverse mortgages for our senior clients. So, and then when needed, there is private financing. So this one's again not as black and white. Different options to navigate depending on the client scenario.
Uh, yes, I love it. And the reason why downsizers, especially, are doing it this way is one, if you sell before you buy something, mathematically, you have nowhere to live for a little bit. And no senior or person uh, really enjoys
Yeah.
not having a home or staying in a hotel or an Airbnb. I have had people go on a cruise, which I think is a great idea if you need to get out of here and you're waiting for some place to move into because of that situation. Again, if you had that ability. But we just did it last week. We had a property close where they did the same thing. It
Yeah.
closed a week before their purchase, before their sale, and that allows them one to move with ease. They don't have to do everything on that one day or that same day. And the more I'm not that old, but I'm getting older, and the people that are of that generation, they don't like anything going wrong or sideways. So the more time they give themselves for something to happen the way they would like it, it allows them to map out their move and make sure everything is planned properly. But that's why the one happens before the other for sure. They're going to
Absolutely.
need from. So here's a quick question, just
Okay.
again general. Every situation is specific to their own for many reasons, for sure.
Hmm.
But generally speaking, a lender would probably have no issues with somebody that wasn't working or anything like that, as long as there was enough equity. By how much more would you say is that not? Let's say they're selling a $2 million home and they're buying $1 million condo, and they
Uh-huh.
had a very small mortgage of 300,000 on that home, so they should walk away in theory with somewhere around 600, $700,000 after everything. Is there still going to be the scrutiny to go through things, or are they just basically saying, "Hey, we have a firm deal. We know what you're getting here. We're not really worried. The money's going to come to us in a bit. You just got to pay us what we asked you."
You would think, right? So I'm actually really glad that you asked this, because a lot of people, especially our senior clients, have this mentality because qualifying back in the day used to be more based on like equity based, or just, how many assets you had. They didn't care as much as income to expense ratios. So technically, what a lot of people don't realize is by definition, bridge financing is only offered to a client if they are continuing with a mortgage product or like a real estate financing product. So, unless the client intends to have, let's say, a mortgage after they buy, or even a home equity line of credit that's completely open after they buy, we can't offer traditional bridge financing.
Mm.
So, I don't know if I've lost you, if I'm
No,
confusing you there.
no, 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 no.
Yeah.
I'm with you. I'm totally
Yeah.
with you there, and I understand what you're saying. And I
Right.
guess then in that instance, they'd have to have enough to do a HELOC. Um,
For these kinds of scenarios, there's again so many different situations that you might run into, right? So what we might do, what is the most common is maybe set up a client with a home equity line of credit on their purchase, and then, they might have funds to bridge the gap for what's considered the down payment. They might need to take a reverse mortgage to bridge that gap for the down payment, but technically there needs to be the down payment and then the lending. Am I getting too confusing there? I'm, like, just
no,
kinda
no, no,
sidebarring.
no,
Am I
no.
confusing you, or am I answering your question
You,
there?
no, I'm following along. You
You're
answered my
following?
question, and
Okay.
again, at the end of the day, everything
Yeah.
breaks down to having a
Yeah.
specific situation and a specific answer for a specific client with a specific purchase. Everything like that matters. So I understand
Absolutely.
exactly what you're saying, and maybe I asked something that was hard to answer in a general sense,
It is,
uh,
yeah.
but this is something that I think people should understand what they're doing and how they need to do it rather than just assuming, right? Again, uh, I was the same way thinking that, and I'm not even there yet. I would have thought for sure that the equity is there. It's going to make a lot of sense. But again, risk mitigation, the
Yeah.
lenders want to make sure that they are not at any large risk amount, right? So
Yeah.
I completely understand. And this is why, again, even someone that does this every day, talks to people all the time about buying, selling, investing properties, this is why we have professionals. Speak to the experts, uh, not your sister. I joke about that because, long story short, I had a client, a new landlord, call me and say they took advice from their sister. And when I asked, "Oh, their sister's a landlord," she said no. And again, family, friends, everybody that's in our lives are trying to give us proper advice, something that is going to help us. But at the end of the day, we know what we know and we don't know what we don't know. And this is why it's best to reach out to professionals. That's why I was saying at the beginning, Melissa will talk to people. Her office is directly across the hallway from mine, at our Remax Hallmark office here. She's our in house mortgage specialist. So I see her almost every day, if not every day, multiple times a day. Probably depends if I'm here that day. But, anyways, I know how she works with clients. She's helped some of ours out as well, and it's getting in front of things and understanding how you have to move forward so you have a plan of action, not assuming your plan is going to work, then getting involved with the professional and saying, "So this is what I'm doing," and they have to say, "Well, that's not going to work." Um, anyways, I'll leave it at that. I don't want to dive into any more about because I say it all the time, but use your professionals, get advice from experts, not online or ChatGPT. I was they know a lot, but even ChatGPT does make mistakes. I was told by an AI educator the other day that they throw things in there when they don't have an answer just cuz, and you have to challenge it, and then they'll say, "Yeah, you're right. I made that up." So that's interesting. Anyways, people are the resource, not a computer. And
I've stooped ChatGPT before as well with mortgage stuff, so yeah, I'm glad you
yeah,
mentioned that. Yeah. Yeah, I've
but
had a
it's
client go as far as tell me that they pre-qualified them using ChatGPT, so I was like, "Oh, don't do that."
nice. ChatGPT the
Yeah.
lender too.
Right? So, but I will, just to kind of piggyback off of what you were saying, Kevin, we already mentioned that it's case by case scenario. I always say one shoe doesn't fit all. And, it's great to talk to your family and friends, but when it comes to mortgages, avoid comparing your rate or your situation with family or friends, because even when it comes down to your particular rate, your rate might vary depending on the type of mortgage you need, I see Kev going,
No,
yes, yeah,
that's how I was gonna finish it. So that's awesome
yeah,
that you're thinking about this. So yeah, because everybody's, especially right now, right? We've been watching these rate drops for the last year and a half now.
yeah,
Everybody in my industry, everybody in your industry, they tell the whole world that it happens, but no one really understands how it actually affects different mortgages. They just know that the rate has dropped again, and that should be a good thing. And it is good news, but your rate is just one variable to your
yeah,
mortgage. There's so many other things that are involved in it.
yeah.
So yeah, rate matters, but it's not the be all and end all. But I'll let you break it down more.
Of course. So when it comes down to rate, the loan to value matters, the client situation matters. So a lot of things do go on behind the scene. And yeah, so first and foremost, you want to look for the best rate, but you also have to be mindful of your particular situation and circumstances. So, like you mentioned, all that goes on behind the scenes.
Not to try to stump you here because I
Go
don't
for
know
it.
the answer to this, but I'm curious to know roughly
Mhm.
how much it really makes a difference. So if I had a 5-year term, right, with my mortgage, and I got something that was point one of a difference or point two of a difference. Let's even go crazy because I know most rates are very, very similar when we're looking at stuff. But
Yeah.
if I, what would be the difference monetary, the monetary difference between uh 4.79 and 4.99 over the course of let's call it 5 years, the term of the mortgage.
Yeah. So amortization, 25 years or 30 years, for example, is really what determines your monthly payment, right?
Okay.
And then the term is how long you're committing to that rate for. With the 25-year amortization, your monthly payment might be higher, but then when you expand that to a 30-year, it's even if the rate is slightly higher, it might decrease the monthly payment a bit. I went off on a bit of a tangent there. Um, I rely on mortgage calculators way too much, but to roughly answer your question, the real answer is number one, the size of the loan. So for a tiny loan, maybe 300, 400,000, it might only move the needle like $20, give or take, like something very nominal. Of course, if you're talking about $1 million loan, then you might be looking at a couple $100, right? So a few things matter. So I touched on amortization. So even like I said, just adding those 5 years to the lifetime of your mortgage might even bring down the monthly payment a little bit. And again, yeah.
Yeah, but I think at the end of the day, it doesn't matter. 20 bucks? Are you really making a decision to save $20 when so many other things matter? Right? On a, again, a $400,000, even on $1 million, you want to talk about a couple $100 difference over a 5-year term to pay it all down. It's peanuts compared to it. So again, rate matters, but it's not the be all and end all. So as much as the rates are dropping, real estate is on sale. You should be buying something right now because the whole saying goes buy low, sell high. Well, right now is a buy low period. So uh, get moving, buy a property.
Absolutely.
First time home buyers, people upsizing, investors. Now is the time for you to buy something. Um, Melissa, thanks so much for sharing with us today. I appreciate you and your expertise. Do you have anything that you want to leave with today to say one last time or farewell note?
I just want to say thank you for having me again, Kevin. I really enjoyed our segment today. And again, just to feed off of what you were saying, trust the experts, lean on the experts. And I'm a firm believer that knowledge is power. So the more information and knowledge you have in advance, the more able you are to make informed decisions.
I love it. As
Yeah.
I said earlier, you only know what you know and you don't know what you don't know.
Yeah.
Like always, we try to share something that you need to know. Thanks so much for listening to our little episode here about mortgages. Again, Melissa, thanks so much
Thank you.
for sharing everything. And we'll talk to you guys soon. Bye for now.